Let's bring in CNBC contributor, Capital Area Planning Group's Malcolm Ethridge. Dan Greenhouse, of course, is still with us. Malcolm, it's good to see you. This really underscores what's been happening in tech. It's semis, it's software, it's the mega caps, even IBM, some of the so-called old tech. This trade just continues to work, and it doesn't seem to want to let up.
Well, I think that Dan was making a really good point about the fact that we won't really know the impact of tariffs until we get Q2 earnings, and that's where we'll really find out what the impact was. And I think what we're seeing is a rotation from investors away from anything that is sensitive to those tariffs just in case into things like software that tend to be a little bit more defensive against whatever the tariff rate we ultimately settle on with our different trading partners is. So I definitely think that right now it's a decent rotation. We'll see if it has staying power and if investors decide that this is the place they want to be long term, though.
You believe in this tech trade continuing the way it has?
Yeah, again, I mean, the point I keep making as a non-exclusive tech investor is show me the evidence that something's slowing down. You had DeepSeek, which was a worry for like a minute and a half. That's done nothing. The idea was we're going to need less power. That hasn't happened. CapEx expenditures are still as high as they've ever been.
Meta Constellation deal today showing, the power play angle here.
Yeah, I mean, this is a multi-year story for nuclear and for AI demand. And again, if you think that you don't need as much power, you're not striking a deal to restart 3 Mile Island, let alone the Constellation deal today.
I know, but if you said that you think that we could be more comfortable, I think was the word you used, because, well, in part technically, if you think we're going to new highs and then potentially beyond, is tech the thing going to carry you there? Are we going to get another big, broad move in the market to represent that?
Well, tech's probably going to carry you there just mathematically. They're so big. And of course, as everybody knows, their earnings growth dwarfs the rest of the market, et cetera, et cetera. But let's not pretend that it's only tech. I mean, you've got industrials like RTX, both GEs are basically at highs. Visa and MasterCard basically at highs. The insurance companies basically at highs. I mean, there's a long list of companies that are not tech that are doing phenomenally well in this market. And again, the market's up, the S&P 500 is up, called 1% for the year. Roughly 50% of stocks are up more than that. Roughly 50% of stocks are I guess, down. That's what you would expect to see in a normal market. So I don't know,
but this has been such an unexpectedly abnormal year thus far.
That's fair, but
for how we came in. No. If I told you if I showed you the year-to-date chart, and I was going to say, well, here's what happened here, and then here's what happened there, and so forth and so on, and you said, well, I probably didn't see that coming.
Yeah, no, I don't think many people saw it coming. But my point is just where we are. You've got a good number of stocks trading above the 200-day moving average, called 50%, 75% trading above the 50-day moving average. I mean, there's something going. My only point, again, I'm not arguing with what you're saying. My point is just there are things going on in the market. Look at Booking. That are not technology related.
No, I get it. I mean, things like that. Look, like CrowdStrike, for example, and some of the cyber names have been working. They don't have to be mega cap related.
ServiceNow, CyberArk.
But Malcolm, CrowdStrike reports in overtime tonight. We're showing the chart here. 2 months, 41%. I said at the very top of the program, I could pull 20 names out of my hat that are well known, that are seemingly hitting 52-week highs again today. This is one of them, but that increases the pressure going into the number.
Yeah, I think it does increase the pressure on the company, but I also feel pretty confident in their ability to actually impress investors listening to the call. I would not be looking to sell shares here ahead of the print. I think that realistically, this is their first time reporting since last year's outage and the hangover of the CCP plan to make it up to their core customers who are impacted by that outage. So I think that everything is setting up for them to really wow the street, especially as far as the target toward their $10 billion of ARR that they're targeting, that they've been talking about. This will really be their first opportunity since then to focus the conversation solely there. And I think investors will be glad that they stayed.
Right. I mean, these have been issues that have been mentioned in the past, a slowdown in government spend.
Yeah, but I think in CrowdStrike's case, the thing that investors really will care about is the fact that they don't have those support payments to those core customers to make it up to them hanging over them anymore, which was really a drag on margins the last couple of quarters that they reported. So they're telling us something like a 97% gross customer retention rate, which has to make its way into this earnings print. And I think we should also consider the fact that they've even decided to jettison the 5 core modules or more metric from their land and expand plan that they were reporting on, because the average new customer is showing up requesting 5 or more modules as they sign contracts, which has to speak well about the growth of their customers going forward. So existing customer base, maybe not as strong as it was a couple of years ago, but new customer base, new signups, I think is a really good testament to how that growth is really showing up. Plus, you throw in the fact that they are talking about improvements to margins from AI, and they're feeling so confident that they just executed a 5% reduction in force because AI is able to do so much more. I think all of those things taken together start to spell a really great growth story for the name. So I understand the analysts who have shown that they're starting to get a little bit hesitant because the valuation is showing itself so stretched. But I also think there's tremendous opportunity for the company to grow into that valuation going forward.
How do you look at stocks like this?
Listen,
Momentum, by the way, is another area of the market that's been hitting a new high. MTUM did today.
That's right. Listen, I'll leave the specifics of CrowdStrike to Malcolm. I'll just pivot off a point on the federal contracts. Throw up a chart of Booz Allen Hamilton, which is BAH, Boy Apple Henry. There is probably no greater illustration of what's happened here with respect to Doge and government contracts than Booz Allen. This is something every company and every analyst has to be aware of, because whether we have seen thus far, and we have not, the Doge cuts or that the Doge attitude, if you will, be codified into law. That's probably, I mentioned earlier, you can't do a lot of this in the reconciliation bill, but you can do it on the back end. And I think somewhere in the next couple of months, whenever they do get this bill passed in whatever form in which it is passed, these types of cuts are going to get formalized into law, certainly to a greater degrray than is currently the case.
Do you have a thought on the Knicks firing Tom Thibodeau?
I have many thoughts on the Knicks firing Tom Thibodeau. I know you do as well. But listen, I think...
I knew you didn't expect that one. We don't need your opinion.
Tough end to the year.
I was just curious. Malcolm, we'll spare the audience. We'll talk to you soon. Malcolm Ethridge, Dan Greenhouse,